Scott Gecas is standing by. He's with Walsh Trading. Scott, what's the mood on the floor today with all these grains?
It's pretty quiet. Compared to yesterday, completely quiet, completely different tone here overall. In the soybean market, you've seen a little bit higher push yesterday just due to them getting absolutely hammered yesterday. Now we came back to a little bit unchanged, a little bit weaker. So, there's all kinds of rumors being swirled around. One of the articles I was reading overnight was calling for, a 6 handle in soybeans by the end of the summer. Whether or not that actually happens or not, we'll actually see. The volatility in the option is both pretty much flat compared to yesterday. We have two-sided trade. There's really not much volume going on overall. In the corn market, we're just waiting for something to come out with supply and demand, as well as any positive news out of China. If the trade war deal does get done, we expect China to be an aggressive buyer for U.S. corn. So we're going to see how that all plays out.
Sounds good, Scott. We'll take a break. When we come back, we'll get into the livestock numbers. That's straight ahead here on the Marketing Report. Let's bring back Scott Gecas. They're in Chicago at the edge of the trading floor. Scott, with these deferred contracts and the hogs trending higher and showing a lot more strength, is this an anticipation of maybe a deal? What's driving that?
Yeah, it's 100% anticipation that something gets done with China. Their production keeps falling and keeps falling, so they need it. Right now we have about a 62% tariff tax on it. So the rumor the other day was they were going to ease on the tariffs. That has not materialized yet, so we're going to keep an eye on that. But you're seeing a build in the options, just even into June options, all the way up to 98 to 100 calls. So that tells me that everybody is expecting something to get done. Now, when we had that big pullback in the hog market, it was due to a lot of cancellations due to exports to China. But if we look at overall exports, we're on record pace for the largest amount of exports to China, since 2016. So that in alone is a bullish catalyst as well. So we're going to see how some of this is going to play out. But some of the deferreds, they're looking at prices of 110, 140. The calls are being built and built to the upside in all the deferred contracts right now.
Wow, that's a pretty steep number there that you're talking about. Okay, if you're a producer, then what do you look at when you're hearing this kind of news and looking at what could be down the road? Right.
Well, if you're a producer, all you got to do is sit there and just wait. Unfortunately, that's just how that has to happen. When something gets done, then that starts materializing, then you're going to see the exports explode pretty much higher, especially if those tariffs come down.
Can we get any sense of direction through these cutouts then?
Well, the cutouts and all that, it's pretty, I hate to say it, but it's immaterial right now because everything's focused on the Chinese trade war talks. If that deal gets done and they drop those tariffs, they're expected to take over 30% of the U.S. pork exports.
Wow, that's a big number. All right, Scott, sure appreciate it. Scott Gecas with Walsh Trading. They're in Chicago, right at the edge of the trading floor.